How does OPEC Plus production cuts affect the stock market?
All right, so OPEC Plus is the, encompassing group now, including Russia.
Yeah, I think it's 11 OPEC members plus
Right.
12 non-members or something
Yeah,
like that.
exactly. And so, the old OPEC is now OPEC Plus. It's kind of like Hulu Plus or whatever. They keep adding pluses to things. Anyway, they have announced, of course, that they're going to be cutting back the production of oil by 2 million barrels a day. There've been quite a few articles talking about what that really means and how many barrels they can actually cut back, because they have some countries that can't do it. It'll be interesting to see how this plays out. But nonetheless, the thing to kind of understand about this is that it has the potential to impact inflation, because it has the potential to rise the price of oil, which could ultimately raise the price of gas. And so actually we have a chart to show you here too. So this is the crude oil prices for what's called West Texas Intermediate. This is one of the versions of oil that gets reported. And you can see, over the years here, it's been climbing and climbing. And then we've had quite a nice drop for a while here. And now we're coming back up right now, really upon the announcement of that. Although if you look really closely, there's a little tick downward, like even today it was down some.
Yeah.
And so this is a really important area. So OPEC cuts back, but the price of oil can still go down because the demand can go down. So with everybody tightening up everything, get global slowing, and we need less oil. And the big issue really is China locking down for these COVID situations. They're a huge a producer of goods, and that means big user of oil on the open market too. So, if they slow down, then you start to see oil coming down. So there's no guarantee that the cuts that they're making are going to be inflationary, but it could just be the beginning of their cuts. And so, this is one of the things that happened in the 70s, was that you ended up with this very tight oil market, and gas prices went up tremendously, and it created this overall inflationary environment. Unfortunately, so many things are exposed to the price of gas, and so, because everything, even that grocery store, that you pay more at now, their delivery cost to get the goods there is going up because of gas price. So this is a chart of gas prices, and again, you can see that we had a really nice drop going, and then it bounced a little bit again just recently. So that could impact the October CPI number, at least the headline inflation number that includes, energy and food. So, we'll see how this plays out. But that's how this affects the stock market, because if it affects inflation and it affects the way the Federal Reserve has to talk about rates and actually raise rates, then the stock market reacts negatively to that. So OPEC increasing, decreasing production possibly increases the price of oil, possibly increases the price of gas. That ends up in the inflation reports. Federal Reserve gets more aggressive, trying to drive down demand by raising rates. Raising rates, being more aggressive, talking more aggressive, generally drives down the stock market, right? So that's the lineage, and that's how that all plays through. And actually, I do think, just from a pure educational standpoint, one of the things that's really, I think, fascinating and useful as an investor is to understand relationships. It's like a neural network, and you can spend your whole life trying to learn these things, and you'll never learn them all, but it's still really interesting. How do things connect? And that's basically what this question is how do these things connect? So I think it's a great question.
Yeah, and the thing is, if the world economy goes into recession, OPEC's production cuts really don't matter in the end. So the overall economy still affects the price a lot.
Yeah, exactly. And that's that their claim is that they are cutting back on the production of oil because of the softening that they see coming, and they want to keep the price up and protect all of these producers at this price level. And so, but unfortunately, it's also political. They're doing it at a time right before the midterms, and so there's some thought that maybe this is happening to try to increase the price of gas, to increase inflation, and affect the polls in general. And there could be a kind of a weaponizing thought process here, because we've now seen slowly but surely the natural gas deliveries to Europe have been coming down and down and down from Russia. and now, of course, the Nord Stream was closed, and now it's been sabotaged. So, natural gas is going to be, reduced dramatically from Russia. And now I'm starting, and this is just my own personal opinion, but we're starting to see some cutbacks in oil and that coordination. And so you wonder if they aren't going to be doing the same thing in oil that they just did with natural gas. They didn't do it right away. So there must be some reason that they can't do it right away, because it is very effective at creating havoc in the Western economies, is to get that price up. And so, that, I think that would be my bigger concern here. The 2 million is probably something we can overcome. But is this a trend that's starting, and they're going to continue to try to, pressure the West here with that price? So, and that could be a threat, right? So we'll see how this plays out.